Hello guys, welcome back to my YouTube channel. So for today, we will finish the cost of capital topic by discussing number 1, the dividend growth model, number 2, the capital asset pricing model, and the last one is the weighted average cost of capital. Okay, so take note, we are done with the computation of cost of long-term debt and the cost of preferred stock. And always remember, sa lahat ng cost of capital, ang ina-after tax lang po o ang may tax implication lang ay cost of long-term debt. Okay, so now let us discuss the cost of common equity. And to compute cost of common equity, you can use either the dividend growth model or the capital asset pricing model. So, the question, sir, is, kailan ko gagamitin ang dividend growth model at kailan ko gagamitin ang capital asset pricing model? So, number 1, pag sinabi ng problem, ito ang model na gagamitin. Or kung number 2, silent ang problem, depende sa given information. Kasi yung application ng dalawang model is totally different from one another. Kumbaga yung given information para masagutan mo siya under DGM is totally different sa given information under capital asset pricing model. Okay, so sige, let us start by discussing the dividend growth model. So this model is also known as the Gordon growth model because it was developed by Myron Gordon. And the dividend growth model assumes that dividend grows either at a stable rate in perpetuity or at a different rate during the period. So ang bottom line nito, this model assumes that dividend grows. Okay, ngayon ang question, sir, paano lumalaki ang dividends? So to explain that, let us go back again to financial accounting. Kasi financial accounting ang pinakamakapag-explain sa atin ito kasi and I assume most of us are done with financial accounting, lalo na kung ikaw ay nasa financial management na. And under financial accounting, always remember that dividends are being declared out of retained earnings. Tama? Kumbaga, ang dividends dinideclare based sa balance ng retained earnings. Pero kung isipin natin, ang laman ng retained earnings ay saan nanggaling? Sa net income. So technically speaking, ang dividend ay nanggagaling sa earnings ng kumpanya. O ano naman ang pakailan po dun, sir? Paano niya ma-explain na ang dividend ng common equity ay lumalaki? Remember last time sa financial accounting, every time na nagde-declare ng dividend ang kumpanya, ang unang binabayaran ay preferred stockholders. At kapag may tira, that's the time na merong ibabayad kay common stockholders. Nasan doon ang dividend growth model, sir? So kung iisipin mo, kung lumalaki ang net income ng kumpanya, lumalaki ang retained earnings ng kumpanya. At pag lumalaki ang retained earnings ng kumpanya, lumalaki ang capacity or capability ng kumpanya to declare dividends. Or in other words, lumalaki ang dividends na pwede niyang i-declare. So kung isipin mo, kung lumalaki ang total dividends na kayang i-declare ng kumpanya as net income increases, at take note, ang preferred stockholder ay may fixed return. Remember last time, pinag-usapan natin sa last video lecture na ang dividends per share ng preferred stockholders are generally fixed. Tama, kasi ang preferred stockholders ay nakakatanggap ng fixed return. So kung isipin mo, kung ang total dividends lumalaki at ang dividends ng preferred stockholder ay constant, ibig sabihin, yung tira na para sa common equity or sa common stockholders ay lumalaki rin. So yun ang assumption o dun ang galing ang assumption ng dividend growth model. Kasi ina-assume niya that net income increases. And as net income increases, retained earning increases and the capability to declare dividend also increases. And yung dividends na natatanggap ng preferred stockholders are generally constant. So kung constant yung napupunta sa preferred stockholders, yung tira lumalaki rin kasi lumalaki nga yung total dividends, and that's the assumption of this model. Since the company is growing, the dividends are also growing. Pero itong dividend growth model, I'll repeat, applies only. It applies only to common equity. And when we say common equity, it could be retained earnings or ordinary shares. And the cost of retained earnings, take note cost of retained earnings under DGM is known as KE. Kasi may mga problem solving minsan, ang nakalagay lang, compute KE, ay lintik na anong KE. So pag KE, RE. Pag KN, ordinary shares. Okay, kung magaganto lang yan Kaya tinawag na KN, tanda mo na lang, N, new ordinary shares. KE, E, earnings, retained earnings. Para mabilis mo lang siya maalala. KE, cost of RE, KN, cost of new ordinary shares. Okay, sir, paano kinocompute ang cost of common equity under DGM? So, kung titingnan natin, halos pareho lang yung dalawang formula. Tama ba? Anong pinagkaiba ng dalawang formula? Ang pinagkaiba yung FC. Ano yan, sir? Filling clause. Ay, hindi yung filling clause. FC stands for flotation cost. So, take note, nagbabawas ka lang ng flotation cost sa price kasi PO o P0 is your issue price. So, kumbaga, sa cost of RE, ang denominator, issue price. Sa cost of ordinary shares, ang ginagamit na denominator, net issue price. Pag sinabing net, babawasan ng flotation cost. Kaya may minus issue cost sa ordinary shares kasi ang ordinary share ini-issue. Ang retained earnings, hindi. Kaya hindi ka nagma-minus ng flotation cost sa cost of retained earnings. Next, sir, anong ibig sabihin nung D1? D1 stands for your future or expected dividends. Pag sinabing future or expected dividends, yung dividend in the future o yung dividend na i-declare mo pa lang. Kasi kapag ang binigay ng problem, for example, the company just declared dividends or the company is currently declaring dividends. So kapag present or past dividend, ang tawag doon ay D0. At ang kailangan natin is to convert D0 papuntang D1. Kasi ang kailangan natin sa formula, I'll repeat, is D1. Pag sinabing D1, future dividends or dividends at the end of the period. Kasi pag sinabing D0, that is past or present dividend or dividend at the beginning of the period. Okay, so ang kailangan natin yung i-declare pa lang or future dividend pa lang. And to convert D0 papuntang D1, that is D0 times 1 plus growth rate. So, for example, ang dividends per share, kasi pag sabing D1 or D0, parehong dividends per share yan eh. Nga lang, ang D1 future, ang D0 past or present. So, for example, nagbigay ng current dividends per share na 100. So, pag sinabing current, D0 yon. Ang kailangan natin, future. Assuming ang growth rate is 10%. So, para ma-convert ang D0 papuntang D1, that is simply 10 times 1.10. Saan galing yung 1.10? That is 1 plus 10%. So, ingat lang ha, madali ang formula ng cost of RE saka cost of ordinary shares. Mag-ingat ka lang palagi sa D0 saka D1. Kasi pag D0 ang ginamit mo, lalabas sa multiple choice and that is wrong. Ang kailangan natin ay D1. Okay, so sir, ano yung GR? Plus GR, that is your growth rate. Di ba hindi mo napansin? Ang formula ng dividend growth model is actually or almost the same sa pagko-compute ng cost of preferred stock. Di ba napansin mo pareho? Dividends per share divided by net issue price. Yun nga lang, sa RE, hindi net issue price ang ginagamit kung hindi issue price lang kasi hindi babawasan ng flotation cost. Tapos, ang dividends per share na ginagamit, hindi past kung hindi future dividend. Sa preferred stock kasi, hindi na kinaklasify as future or past dividend kasi ang dividends per share ng preferred stock are generally constant. Di ba? Yan nga pinag-usapan natin kanina. Unlike ang dividends ng common stocks or common equity, lumalaki, nagbabago. Kasi yan ang assumption ng dividend growth model. Kaya kung titingnan natin, halos pareho lang talaga o almost the same ang DGM doon sa formula ng cost of preferred stock except for magpa-plus ka ng growth rate. Kasi ang growth rate ay nag-a-apply lang po sa common equity at hindi nag-a-apply sa preferred stock kasi ang preferred stock ay nakakatanggap ng fixed amount of dividends. Okay? So again, ingat lang ha. I'll repeat, ingat lang palagi sa D1 at saka sa D0. So let us apply the formula of your cost of RE saka cost of new ordinary shares on our sample exercise. Sample exercise. So on our sample exercise, meron tayong tatlong cases. Case A, Case B, and Case C. So our objective is to compute KE and KN under the following cases. So let us start first with Case A. So, sa case A, parang basic tong case A, ang D1, take note, ang binigay na sa'yo ay D1, 4.50. Ang price is 60. At ang G, or growth rate, is 6%. F is your flotation cost, is 4 pesos. Okay, let us compute KE and KN under case A first. Okay, case A. KE tayo. Anong KE? That is the cost of retained earnings. So, KE is 4.50. That is the dividends per share, the D1. Divided by the issue price, which is 60. Kung papansinin mo, hindi natin binawas ang flotation cost kasi I'll repeat, hindi ini-issue ang retained earnings. Plus the growth rate of 6%. So, the answer is 13.50%. Next, KN. So, kung titingnan natin, ang formula ng KN, halos pareho lang sa KE except that, ang denominator mo, babawasan mo ng flotation cost, which is 4 pesos. So, pag minus mo yan, and then dinivide mo yung 4.50 doon, plus 6%, the answer for case A would be 14.0%. So, this would be the answers again for case letter A. Diba? Totally basic. Yung nga lang ang nilabas ko kasing exercise is parang tabular form. So, ito yung given, ito yung item, ito yung given amount niya. Most of the time, sa cost of capital under DGM, paragraph form yon. So, ikaw ang kailangan mag-determine sino si D1, sino si current price, sino si flotation cost, sino si growth rate. Pero again, mag-ingat lang kayo sa D1. Pag ang ginamit na word ng paragraph is past or currently or just declared. So, pag basta naka-past tense o naka-present tense yung verb, automatic D0 yon. Ang kailangan at ang dapat na ginamit na word para maging future dividend is the company will declare. Will pay. Kapag will, syempre future yon, D1 yon. Okay, so ingat lang kayo dyan palagi. Next, balikan natin yung case B. Sa case B, binigay ang price, 36. Binigay ang growth rate na 5%. Binigay ang flotation cost na 2 pesos. Sir, walang binigay na D1 or dividends per share. Sir, void na yung problem. So, ingat lang, hindi void ang problem. Kaya mong makompute ang D1 by using the payout ratio. So, as you remember, payout ratio is being discussed under FS analysis. But payout ratio is a percentage or represents the percentage of your net income that was declared as dividend. Kasi dalawang ratio yan mag-asawa. Nandyan yung payout ratio sa retention ratio. Kaya tinawag na payout ratio yung isa kasi ito yung portion ng net income na pinay out. Pag sinabing pinay out, dineclare as dividend. Samantalang, ang retention ratio ay yung percentage ng net income na hindi dineclare as dividend kung hindi na-retain sa retained earnings. Kaya nga, kung ang payout ratio, kung for example, 20%, automatic, the retention ratio is 80%. Palagi silang baliktaran. Anyways, so kung titingnan natin, based on that, we can say na pag minultiply natin yung 20% sa 12 pesos, that is the dividends per share. Pero ingat ka lang, kasi dapat mo malaman ano yung earnings or net income na binigay. Since E1 ang binigay or earnings at the end of the period, ang lalabas na DPS is D1. Kasi kung E0 ang binigay o earnings at the beginning of the period or earnings at the end of last year, then ang lalabas pa lang ay D0. Ang kailangan natin, D1. So, ingat lang kayo palagi sa D0 talaga sa D1 kasi yan yung madalas na trick nitong topic na ito. Anyways, since alam na natin kung paano makompute ang D1, so ang KE natin to compute D1, that is 12 times 20% divided by the price of 36, then plus the growth rate of 5%, that is 11.67%. Sa KN, pareho lang sila na computation except that ang denominator, babawasan natin ng flotation cost which is 2 pesos. Therefore, ang ating KN is 12.06%. Diba, napakadali lang nitong topic na to Lahat ay umiikot lang sa formula. Okay, so last na for your dividend growth model. Let us proceed to case C. So, case C, ito na, expressly sinabi ng problem, D0 siya. Bakit D0? Kasi at the beginning of the first period. Growth rate is 9% and your price is 60 and flotation cost is 3.50. So, ang kailangan natin ay D1. Remember kanina how to compute or how to convert D0 papuntang D1? That is 3. Since ang growth rate is 9%, that is 3 times 1.09. Since KE ito, or retained earnings, ang denominator ulit natin, walang bawas na flotation cost. Then plus 9%, the answer for KE is 14.45%. Next, sa KN, syempre kapag na-compute mo na yung KE, wala nang challenge o no-brainer na yung KN. Ang KN, sa pag-compute ng KN, yung denominator mo lang, babawasan mo ng flotation cost na 3.50 and everything will be the same. And if you will simplify this one, your KN or the cost of new common shares would be 14.79%. So again, this would be the answers for your dividend growth model. Ano napapansin mo from case A to case C? Di ba ang pinaka-noticeable from case A to case C is that ang cost of RE is always lower than the cost of new common stock. Bakit? Kasi kung titingnan mo, mathematics-wise, mas mababa ang denominator ng KN. Tama, pansinin mo, sa lahat, palaging mababa ang denominator ng KN. At kapag mababa ang denominator sa mathematics, di ba yung amount na nakukompute ay mas mataas. Kaya, and therefore, ang KN ay mas mataas sa KE because of that mathematical concept. Okay? So, we are done with dividend growth model. Let us proceed to your capital asset pricing model. Take note, this model describes the relationship between systematic risk and expected return. And this model assumes the expected return of a particular shares or particular stock depends on the volatility relative to the overall stock market. Take note that the volatility of the price of a stock is measured by the beta coefficient. Kaya nga, if beta coefficient is greater than 1, then there would be a higher risk in price volatility or price variation. Sa Tagalog, kapag ang beta coefficient ay mas mataas sa 1, mas malaki ang chance na pabago-bago o mas magbabago ang presyo ng shares. Kaya nga, under capital asset pricing model, the cost of capital is computed as your risk-free rate plus beta times market return minus risk-free rate. Sir, bakit naging ganyan ang formula? Ano nga beta na yung risk-free rate na yan? Isa-isahin ulit natin para maintindihan mo. Pag sinabing risk-free rate, ito yung return from a stock or investment na walang risk. And generally, that pertains to your government investment or government securities. Generally, either walang risk o mababa ang risk kapag nag-invest ka sa government securities. So that is your risk-free rate. Pag sinabing market return, ito yung return na makukuha mo sa isang investment na merong risk. Kaya nga pansinin mo, market return minus risk-free rate is known as the risk premium. I'll repeat, market return minus risk-free rate, that is your risk premium. Kaya nga tinawag siyang risk premium eh. It is the excess risk by investing to a stock with a higher risk than investing in government securities. For example, pag nag-invest ka raw sa government securities, it will give you a rate of, let us say, 5%. Pag nag-invest ka sa isang stock o sa corporate, then definitely meron ng risk yun. Assuming ang ibibigay, syempre 7%. Mas mataas yun kasi ang rule, the higher the risk, the higher the return. So, ibig sabihin, 7% minus 5%, ang risk premium, ang sobrang risk, pag nag-invest ako sa corporate securities would be 2%. At yung 2% na yun, hindi palaging constant yun. It could change depending on the price volatility measured by the beta. Kaya nga pag nakuha mo yung risk premium, minumultiply siya sa beta para ma-incorporate natin yung risk of price variation. Then that's the time that you will add it to your base rate or base rate or your risk-free rate. So I'll repeat, risk-free rate plus beta times risk premium. Pag sinabing risk premium, that is market return minus risk-free rate. That is the computation of your cost of capital under capital asset pricing model. Diba napansin mo, totally magkaiba ang given information under DGM and under CAPM. Kaya kahit na hindi sinabi ng problem kung anong model ang gagamitin mo, obvious na obvious yon sa given information whether CAPM or DGM. Pero ingat ka lang kasi may mga problem solving na minsan magkasama yung given information ng DGM sa CAPM. For example, merong problem solving, may kita kang growth rate, so may kita kang beta, market return, risk-free rate, tapos hindi sinabi ko anong model ang gagamitin. Kapag gano'n ang senaryo, sa mga problem na nakita ko, minsan yung isang model kulang. Anong ibig mong sabihin, sir, na yung isang model kulang? For example, magbibigay ang problem ng market return, magbibigay ng risk-free rate, magbibigay ng D1, magbibigay ng price, ng flotation cost, saka growth rate. So kung titignan mo, based doon sa mga sinabi kong given information, hindi mo pwedeng gamitin ang capital asset pricing model kasi walang binigay na beta. So even though nagbigay ng market return sa risk-free rate, you cannot still use capital asset pricing model. Therefore, you need to use DGM. So yun yung sinasabi ko na problem solving minsan na magkasama yung dalawang given information pero may kulang sa kabilang model. Kaya wala kang ibang choice kung hindi gamitin yung kabilang model. Okay, so let us apply this formula. Let us answer your sample exercise. Using the basic equation for the capital asset pricing model, find the required return for an asset with a beta of 0.80 when the risk-free rate and the market return are 8 and 12% respectively. Okay, so sige, let us answer sample exercise by using the model or using the equation of capital asset pricing model. So kung titingnan natin, napakasimple na ng solution. Ang risk-free rate based on the given is 8%. Sinabi naman niya, ang market return ay 12% at ang beta ay 0.8. So napakadali lang ito. Totally no-brainer to. That is 8% plus ang beta ay 0.8. Ang risk premium is computed as market return na 12% minus 8%, that is 4%. Times 0.8, I think that is 3.20%. 3.20 plus 8%, ayun. Diba? Wow, walang kahirap-hirap. The answer is 11.20%. Okay, so this would be the answer for capital asset pricing model sample exercise. Diba, totally walang ka-challenge ng topic na to. Again, itong cost of capital topic is formula-based. But again, I'm trying all my best in explaining the rationale of the formulas. Okay? Next. And actually, last topic na tayo. Let us discuss the weighted average cost of capital. So, pag sinabing weighted average cost of capital, this is the calculation of the firm's effective cost of capital taking into account the portion of its capital that was obtained from various sources. Pag sinabi mo kasing cost of capital lang mismo, that is either cost of long-term debt, cost of preferred stock, or cost of common stock. Either sa kanilang tatlo lang yon. Pero pag sinabing weighted average cost of capital, yun yung pinagsama-sama ng cost of long-term debt, cost of preferred stock, saka cost of common equity. Sama-sama na silang tatlo. Kaya nga pag sinabing weighted average, ibig sabihin, tinake into account mo na yung timbang nung capital sa capital structure. So basically, to compute WACC, it is simply it can be simply computed by multiplying the cost of each cost of capital by their respective weight. Pag sinabing weight, yung percentage ng bawat source to the firm's total capital structure. At kapag na-compute mo na yon, i-add up mo lang silang lahat, that is your weighted average cost of capital. Okay, so i-apply natin yon. Again, I'll repeat, madali lang to. Ang mahirap lang sa pagko-compute ng WACC is kapag yung problem, nire-require kang computein muna yung cost of long-term debt, cost of preferred stock, saka cost of common equity. Kasi katulad nito sa sample exercise ko, hindi ko na kayo pinahirapan. Binigay ko na yung cost ng tatlo. Pero may mga problem solving na ikaw ang magko-compute kasi pag na-compute mo yun, imumultiply mo lang sila sa kanya-kanya nilang weight. At yung weight usually given na yon. And based on the problem, ang weight nila sa capital structure, ang long-term debt 35%, ang preferred stock 15%. Ang common equity, 50%. So, yung bawat weight, di ba, ang sabi sa kanina, doon sa ating discussion, imumultiply mo yung cost of capital o yung cost ng bawat source ng capital sa kanya-kanya nilang weight. So, ang problema mo na lang, if ever, yung cost ng bawat source of capital, the cost of long-term debt, the cost of preferred stock, and the cost of common equity. Sabi ko nga, hindi ko na kayo pinahirapan sa problem. Kung papansinin mo, binigay ko na. Yung cost of long-term debt is 6.5. Ang cost ng preferred stock is 10. Ang cost of common equity is 13.5. So, napakadali ng weighted average cost of capital nito. You will just simply multiply them to their respective weight. And again, I'll repeat, may mga problem solving na yung 6.5, yung 10%, yung 13.5, madalas hindi given. Kaya ikaw ang magko-compute. Okay? Pero sa problem natin, hindi ko na kayo pinahirapan. So, let us compute the weighted average cost of capital. Okay, so ang ating computation is simply the cost of capital times weight. That is your weighted average cost of capital. Yun nga lang, on each source. Ang unang source mo ay debt. Sinabi ng problem, ang cost of debt is 6.50. Ang timbang niya sa capital structure is 35. So pag minultiply mo, that is 2.275. Next, preferred stock. Ang preferred stock is 10%. Ang timbang niya ay 15%. So, pag binultiply mo yon, that is 1.5%. And the last is common equity or common shares. Sinabi na 13.50. Ang weight is 50%. So, imumultiply mo lang, that is 6.75%. Diba? After mo raw i-multiply yung bawat cost ng source of capital sa kanya-kanya nilang weight, anong susunod na gagawin? You need to add up. Pagsasama-samahin mo lang lahat ng WAC at pag pinagsama-sama mo yan, the answer for the sample exercise is 10.525%. So the answer for your WAC or the WAC would be 10.525%. Diba? Sobrang simple. Kumbaga, ang flow ng discussion natin, diniscuss natin ulit yung basic concept, then diniscuss natin yung bawat cost ng source, yung bawat cost ng capital depending on the source. Then, pag pinagsama-sama silang lahat, that is your WAC. So, pag sinabing WAC, weighted average, we are now incorporating their weight on the capital structure. Yung timbang, gaano sila kalaki, ano yung portion nila sa capital structure ng kumpanya. Pag in-incorporate mo na yon, ang tawag na is not simply cost of capital but rather weighted average cost of capital. Okay? So this will conclude our discussion on cost of capital. So to wrap things up, let us answer your discussion exercise or your multiple choice theories. Okay, so let us answer number 1. The pre-tax cost of capital is higher than the after-tax of capital because, so take note, ang meron lang pre-tax saka after-tax ay cost of long-term debt. Kasi ang cost of equity, whether preferred or common, ay palaging before tax kasi wala siyang tax implication. So magiging mataas o mas mataas ang pre-tax sa after-tax kasi ang long-term debt mo ay may tax implication in the form of interest expense. So the best answer for number 1 is letter A. The reason kung bakit mas mataas ang pre-tax cost of capital is that interest expense is deductible for tax purposes. Okay, number 2, kaka-discuss ko lang ito kanina lang. When calculating the cost of capital, ang cost of RE ay mas mataas o mas mababa. Again, it is usually lower than the cost of common shares or common equity. So, the answer for number 2 is letter C. Bakit mas mataas si common equity? Kasi mas mababa ang kanyang denominator. Kasi sa computation ng DGM, binabawasan natin siya ng flotation cost. Okay, last question. Di ba pati theory napakadali? Number 3, which of the following is most correct? Letter A, since the money is readily available, the cost of RE is usually a lot cheaper than the cost of debt financing. Take note, that is incorrect. Ang pinaka-cheap o yung pinaka-mababa na cost of capital is cost of long-term debt. Bakit? Kasi siya ay merong tax implication. The rest, walang tax consequence. Letter B, when calculating the cost of debt, a company needs to adjust for taxes. Dun palang mali na. Ang may tax implication o ang merong tax adjustment is not cost of preferred stock, not cost of RE, not cost of external common equity, but cost of long-term debt. Kasi paulit-ulit na ako, para akong silang plaka, ang may tax implication ay interest expense. Kaya the correct answer for number 3 is letter C. When calculating the cost of debt, the company needs to adjust for taxes because interest payments are tax deductible. Totally true. Okay, so the answer for number 3 is again letter C. Okay, so this will conclude our discussion on cost of capital. So see you on our next videos, and thank you for listening. God bless everyone.